The top business stories live from the Sky News City studio. Scrapping the tourist tax, fashion designer Sir Paul Smith urges Jeremy Hunt to bring back VAT-free shopping for tourists.
Yes, it's about income and money, but it's also about country as well.
The UK services sector put in its strongest performance in January for 8 months. Plus, why Checkatrade is hoping to take the £59 billion home services market digital. Good afternoon, this is Business Live with me, Ian King. The fashion designer Sir Paul Smith has told Sky News that a campaign to overturn the so-called tourist tax is not just about helping rich shoppers coming to buy cheap handbags, but boosting the wider economy. The Chancellor, Jeremy Hunt, has reportedly asked the Office for Budget Responsibility to review the decision in 2020 to scrap VAT-free shopping for international visitors to the UK. Business leaders have long been calling for a U-turn, arguing that it puts the UK at a disadvantage compared with other shopping destinations across Europe. Today, a letter calling for change signed by more than 400 business leaders, including Sir Paul, was delivered to the Treasury.
As somebody who has lots of shops, but not just that somebody who's very proud of our country, and the fact that there's a lot less people been coming to the country, especially to shops, sales, restaurants, museums, and so it's something that real shoppers used to come. I mean, about a third of our business was tax-free shopping. So it's about income and money, but it's also about country as well.
I mean, it would cost around £2 billion, apparently, to restore VAT-free shopping. I mean, the Treasury at the time, someone said this is basically a bung to millionaire Chinese tourists to get a luxury handbag. I mean, there is something in that, isn't there?
Yeah, of course, a lot of it was to do with shoppers coming, but now in all the other EU countries, it's still available. So those people that you've just described are still having the opportunity of buying for 20% off or whatever it is in each country. And so I don't know, you know, from a point of view, you know, what about all the, I mean, I have 500 staff here. If we're doing less turnover, then, you know, maybe I can't have 500 staff. But it's people like in my street, you know, where my main shop is. It's a hotel, and he's signed the letter. Rocco 40 and BAA have signed the letter. So it's not always necessarily about, you know, rich shoppers coming to buy cheap handbags. It's the fact that when they're here, they do spend money in our great cities.
So are you quite optimistic, given these reports at the weekend, that the Chancellor's asked the OBR to look into this issue?
Well, lots and lots of letters, and so this one's got through. And so that arrived, that was sent last Tuesday, and it looks like we've got a bit of contact at last. And of course, with the possible elections this year, then who knows? But yes, please, we'd like it back.
That was Sir Paul Smith speaking to me a little earlier. Some other stories for you now. The UK services sector put in its strongest performance in January for 8 months, according to a closely followed survey published today. The Purchasing Managers Index, in which anything above 50 represents growth and anything below that a contraction, came in at 54.3, up from 53.4 in December, and the best reading since May last year. S&P Global Market Intelligence, which compiles the survey, said high levels of output was supported by a sustained rise in new orders, with inflationary pressures subsiding, and survey respondents highlighting improved confidence among clients due to strengthening economic conditions and expected interest rate cuts. The conflict in the Middle East has caused McDonald's to report lower than expected quarterly earnings for the first time in 4 years. The world's biggest fast food chain reported sales growth of 3.4% for the final 3 months of the year, less than the 4.7% expected. McDonald's said that reflected a drop in sales in the Middle East, which accounts for around 10% of stores operated by its international licensees and around 12% of sales in that division. For the year as a whole, McDonald's reported a profit after tax of $8.5 billion, up 37% on 2022, but the shares have fallen this afternoon by 3%. And the cosmetics giant Estee Lauder is to cut up to 3,100 jobs globally after a recovery in its Chinese business failed to materialise. The world's second largest cosmetics firm, which employs 62,000 people worldwide, said it would reduce its global workforce by between 3 and 5%. Well, the news came as Estee Lauder, which also owns brands such as Bobbi Brown, Clinique, MAC and Joan Malone, reported pre-tax profits of $672 million for the 6 months to the end of December. That was down 45% on the same period in 2022. Sales fell by 9%, reflecting weakness in mainland China and lower skincare sales across the company's Asia travel retail business. Now, the damage caused by storms Henk and Escher last month led to a big rise in spending on roofers and fencers in the UK. According to Checkatrade, the UK home services market is worth £59 billion a year, but business is mainly conducted offline. Well, the vetting company, which connects homeowners with local tradespeople, is hoping to make the market more digital. Well, joining me now is Checkatrade's Chief Executive, Jambu Palaniappan. Jambu, afternoon to you. What sort of uptick in activity have you seen following the storms in January?
Hi, Ian. Thank you so much for having me on. It has been a really busy January, unprecedented winter weather with 10 named storms so far. And as you can expect, in certain categories on the Checkatrade platform, areas like roofing and fencing, we've seen unprecedented increases in demand. Spending on fencing, for example, is up over 200% since January prior, and roofers have seen a 30% increase in demand. It's just highlighted the importance of trusted platforms that can help support consumers through intense weather periods that we're seeing more and more often.
Now, we live in an era of dynamic pricing as per Uber. Have tradespeople been putting up their prices to reflect this increase in demand?
One of the things that we've seen is that the importance of the trusted platform is really critical. So tradespeople on Checkatrade are really cognizant of the reviews that they have on the platform. And so ensuring a high level of service and ensuring that the reviews and ratings are a key part of how they operate. So we've ensured that consumers have access to high quality trades. And we also have a guarantee in place that allows consumers to have peace of mind in terms of their trust in the platform.
Now, you're talking about making the market more digital. What does that mean in practice?
If you think about home services and repairs, it's still one of the parts of our economy that's comparatively offline. If you think about how you book travel or how you search for a car, that process over the last 20 years has really moved online. That hasn't quite happened at the same rate for home services and repairs. So our view is that there is a significant opportunity to bring technology to support consumers and trades to make their lives easier, increase the level of trust in the platform, and make access to quality trades available for all consumers across the UK.
Now, you're opening a new development and research centre in King's Cross, very trendy, hot, tech-centred part of town. What sort of things will be going on there?
As we're making a transition into being a much more technology-enabled marketplace, it does mean deeper investment here in the UK in product and technology resources. And so we'll bring many of the core components of booking, paying for, and finding a quality trade onto a more digital platform. I think for trades also, given the trade shortage that we have in the UK, can help trades manage their business more effectively. And I think our view is that technology can play a key role in that. We do have a significant trade shortage, and we can help trades save time as they manage their business.
Now, you're looking to hire around 30 people, I understand, for this centre. Can a business like Checkatrade really compete with the likes of Google and Meta, who are also based at King's Cross, of course?
No, many of our team that have joined us recently come from more traditional tech companies, and they see the same thing I see as I joined this business just several months ago, which is the potential and market, the £59 billion category that you mentioned, and the opportunity to build a digital-first leader is really significant. So I like our chances.
So, I mean, you mentioned your past. I mean, you used to work as a venture capitalist. What made you leave that industry and join Checkatrade?
I think this is a really unique industry. It's one where you can see the tangible benefits of the work. Homes are a really emotional part of everyone's day, right? Our most prized possession, where people have invested and saved so much and take real pride in their homes. And so for me, being able to be part of a digital marketplace that can help consumers improve their homes and help trades manage their business was a really compelling offer. It's been great to get back to building and leading a business that's got such strong foundations and a significant opportunity ahead.
Well, we shall watch with interest. Jambo, good to talk to you this afternoon. Cheers.
Thank you.
Still to come here on Business Live, we'll have a look at how the markets have done this Monday afternoon. Don't go away.
I'm Alex Crawford and I'm Sky's special correspondent based in Istanbul.
It's like Emirates. It's like better. Fly Emirates. Fly better. Thank you.
Welcome back. The British Business Bank, the government's economic development bank, is looking to launch a new fund investing hundreds of millions of pounds worth of pension fund assets in British growth companies. It told The Times this morning that the fund could launch within 18 months, deploying up to £600 million worth of savings. The move is a response to the so-called Mansion House reforms announced last autumn by the Chancellor Jeremy Hunt, with a view to lifting productive investment in the UK. Well, joining me now to talk about this is Douglas Hanson-Luke. He's Executive Chairman at Future Planet Capital. Douglas, good to see you this afternoon. Are you supportive of this move?
Yeah, absolutely. It's good to see you and to be talking now. The British Business Bank have been working over the last 10 years. They've done a phenomenal job of bringing British startups into a real global leading field, really. You know, we've got the fourth largest startups in the world. And for a small population, that's great. What we're seeing now, though, and the big but, is do we want more public sector money, more publicly managed money going into scaling up, or can the private sector do it? You know, the model from America, from Silicon Valley, where we see the companies there that have succeeded best, they've been invested in private venture groups. And we think there's lots of private investors out there who are quite happy to invest in the UK.
I hear what you're saying, Douglas, but we do have a pretty vibrant venture capital industry in this country.
We do.
Do we really need a government-backed entity replicating its efforts?
The model that has worked so well in America is that NASA, their defense research agency, they provide a lot of grant funding at the beginning for the small seed stage companies. And then after that, it was the private sector that stepped in. There's a risk if the British Business Bank comes in, essentially the taxpayer, the government, then they're slightly going to crowd out the private sector. And this is going to be really important for us as an industry in Britain and for the government and the British Business Bank to be aware of. You know, as I said, sovereign wealth funds, pension companies, they invest with us right now, and we know that they're willing and ready to invest. So waiting another 18 months for the public sector isn't necessarily going to make a difference.
Is it really, though, the role of someone like the British Business Bank to tell pension funds how to manage their assets?
We manage, you know, 100 million for the British government. It's public sector money in seed stage funds, and their job is to nurture companies to get them ready for private sector investment. And we've done that well. But we also manage well over 100 million and more for private sector investors, pension funds, other investors who want to go in themselves, who don't feel the need for the government to hold their hand. And certainly in America, you know, you had those agencies, but then you had the likes of Sequoia, Kleiner Perkins, NEA, very well-known groups.
Oh, dear, Douglas. Douglas, I think we might have lost Douglas there. That's rather unfortunate. Anyway, it was fun while it lasted, wasn't it? So we're going to have a look at the markets now. Well, the US dollar has consolidated its gains this afternoon following last Friday's bumper jobs figures, which have put paid to hopes of early US interest rate cuts. That was reinforced by comments on Sunday evening from the Federal Reserve Chair Jerome Powell, in which he indicated officials are in no hurry to cut interest rates. And, of course, we've had some strong PMI services data out of the US as well today. Look at sterling. It's taken an absolute pasting against the dollar today. I can tell you the dollar is near a 3-month high against a basket of currencies right now. Sterling slightly off against the euro. As you can see, the single currency is also off by just over 0.5% against the greenback this afternoon. Meanwhile, dampened rate cut hopes have hit the oil price, which is close to a 3-week low at one point earlier this afternoon. It's perked up a little in the last half hour. So a barrel of Brent crude currently changing hands at $77.41, about up a little over 0.1%. On the equity markets, well, this is how Europe has finished up this afternoon. A sea of red, apart from the MIB in Milan. Talking points this afternoon include Novo Nordisk. Europe's most valuable company is up another 3.5% in Copenhagen to hit a new all-time high. That's after it agreed to buy the drug manufacturer Catalent for $11.5 billion. That will enable it to boost production of its blockbuster weight loss drug Wegovy. Well, here in London, the FTSE 100 has also finished slightly in negative territory, more or less unchanged, actually. The big dollar earners, gains for them, have balanced out losses among some of the oil and mining heavyweights. Outside the FTSE 100, Auction Technology Group remains wanted after last week's trading update. That's up another 4.5%, while Watches of Switzerland is up 2.75% on hopes that VAT-free shopping may be restored for overseas visitors. Over on Wall Street, well, it's been a pretty disappointing start to proceedings there. All the main indices lower on damper rate cut hopes Features today, though, include Caterpillar. That's up. That's, in fact, hit an all-time high this afternoon on better-than-expected results this afternoon, while Nvidia is also at an all-time high after analysts at Goldman Sachs raised their share price target for the chip maker. Well, joining me this afternoon is Michael Brand, Chief Investment Officer, of course, at Martin Currie. Michael, good to see you. Really, rate cut hopes have been utterly deflated, haven't they? But yet, Jay Powell expects 3 rate cuts this year. I mean, the market was looking at 5, maybe even 6.
Well, I think the market was looking at 6. I think the average now came back to 4. So actually quite a lot of what Chairman Powell said was actually in the price at this point in time. And I would say to people, don't give up hope. The central bankers are clearly conducting a campaign of saying, look, we know it's coming, but we don't want to do too much. In which case, guess what? They'll end up doing more than they say, because that seems to be the way that we have with central bankers.
It is, but if you look at what's been going on the FX markets, it's very interesting. I mean, the dollar has really responded to this, yet we're also expecting big rate cuts from the Bank of England, from the European Central Bank.
Well, I think the European Central Bank is the first to go. I mean, if you look at the language, you know, from Madame Lagarde, it's almost there, right? So they'll go first. Probably, my best guess would be March. I don't think the UK will be very far behind. We are going to go into a period of 2% or below CPI numbers from about April through to October. It's baked in. It's baked in by the oil price. It's baked in where we are. So there's nothing we can do about that. And the pressure on the Bank of England to go from 5.25 back down to something like 4, maybe even below, with those sorts of numbers, is going to be very intense.
It's really interesting, isn't it, looking at the PMI data this afternoon in the services sector right across. I mean, that's all being informed by rate cut expectations to an extent, isn't it?
Well, actually, the PMI data in the UK is much better than that. They're talking about better orders, of all things, from overseas as well. And that really caught my eye. But the really important part of that was they're also reporting actually lower inflationary pressure. So, yes, there's a bit of real wages still to work through. We know that. We've got the big increase in minimum wages coming up in April. But lower inflationary pressure, more orders. Not a bad place to be.
It's not bad at all, is it? And hiring intentions look like they're up as well.
Yes, they do. So overall, I mean, and I have to say, again, this is pretty stark comparison to France and Germany at this point in time, where you're seeing fewer orders and you're seeing continued inflationary pressure. I still think the ECB will be the first to cut, though.
That's very interesting. Now, we noticed the European markets are all off today, apart from the MIB in Milan. You've got a theory as to why that?
Oh, it's Unicredito. Really, a decent set of numbers. A very big cash back for the shareholders and dividends. So I think that really is what's driven that. Worth reminding ourselves that the Italian and Spanish economies are performing significantly better than most others around Europe. Again, the PMI data this morning saying that. And quite a lot of that is to do with the fact that they're big savers. And guess what? They've gone from no interest rate a year ago to a very healthy one today. And it's making a real difference in those economies. And there's Unicredito benefiting from that move.
Now, we're well into earnings season in the US in particular. Now, a bit of a mixed bag today. I mean, Caterpillar up, Estee Lauder down, McDonald's down.
Well, I mean, again, I think this is going to be the way of this entire reporting season. It's not a bad one. That's the first thing to say. Overall, it's OK, but it's going to be patchy. And obviously, you heard in Estee Lauder, it's the overseas sales, it's the tourist sales, it's the sales elsewhere that are not coming back at this particular point in time. But Caterpillar turning around to say, well, you know, guess what? Business is turning over quite happily. Thank you very much indeed. People are investing. I would be a little bit more inclined to take on board the Caterpillar view than maybe the Estee Lauder one.
Yeah, and we also have the tech company. I mean, yes. Meta on Friday. I gather that is the biggest single addition to a company's market capitalisation in history.
Well, it may be. I don't know. I'm not, I haven't got the numbers to hand. But look, again, if you've got it right in the last 12 and 24 months, the barriers to entry to that market are really big at this point in time. And yes, demand is coming through at a rate that nobody forecast, in particular, even 6 months ago, let alone 24 months ago. So yes, you can see why these numbers are justifying the astonishing performance of those stocks through 2023. Now, will it spread? Well, again, that comes to a question of barriers to entry, but overall, it tells you something about business confidence and the business is going forward at this point in time.
We haven't got much time left, Michael, but anything else catching your eye this afternoon?
Well, again, for me, this is a good day to be digging around in those interest rate sensitives in the UK market. Look, rate cuts may be put off a month or two, but they're coming. Do I think we'll get to a handle of 3 by the end of Well, 12 to 18 months? Yes, absolutely. In which case, don't lose faith. As those stocks sell off, I'm thinking about the house builders had a great run. I'm thinking about some of the property stocks had a pretty decent run. Go and have a look. That's where the interest is going to be.
All right, Michael, got to leave it there. Good to see you as ever. Thank you.
Thanks, Ian.
Just before I go, a bit of breaking news to bring you. Avon and Somerset police have said a fifth person has been charged with the murders of Mason Rist and Max Dixon in Bristol. A 14-year-old boy was charged this afternoon and remanded into custody. He is due to appear before a youth court in Bristol and cannot be publicly identified because he is a juvenile. Well, that's it from me. I'm back again at 11:30 tomorrow morning. Hope very much to see you then. In the meantime, coming up next, it's Mark Austin with the News Hour and much more, no doubt, on that breaking news from Bristol. Do stay tuned for that. Thanks for joining me this afternoon. Cheerio.